Welcome to Market Momentum. This week, the U.S. market is at a crossroads, and things are getting really interesting.
Right. That's the billion-dollar question on every investor's mind. You can almost feel the pressure building. The U.S. markets are, well, they're coiled like a spring, just waiting for something to happen, a catalyst to send them flying. So what are these catalysts? And more importantly, which way is this thing going to break?
Okay, so there are two massive events playing out this week. Think of them like two ticking clocks that have the entire market just holding its breath. And, how these things resolve, it could really set the tone for the rest of the year. So first, let's just take a quick look at the foundation we're standing on, the U.S. economy. It's actually holding up surprisingly well. The latest private sector employment numbers, the ADP report, they came in better than expected. We're still seeing job growth. And what that does is it helps push those persistent recession fears just a little further down the road. It gives the market a relatively stable floor to stand on while these other big dramas play out. All right, now for that first ticking clock. We've got the Supreme Court evaluating a case that honestly questions the very scope of presidential power when it comes to trade. This all goes back to those tariffs imposed by the previous administration. And the core question is simple but huge. Can a president just impose broad tariffs without getting explicit approval from Congress? The ruling here could have absolutely massive implications for global trade and, of course, for corporate profits.
So let's just break down the two ways this could go. On one hand, if the court upholds the president's authority, well, it's basically business as usual, the status quo. The market impact would be pretty minimal, probably just a collective sigh of relief that a major uncertainty is gone. But what if the court denies that authority? Oh, that would be a massive positive shock to the system. Tariffs could be reversed. Companies could see billions with a B in refunds. Just imagine that cash suddenly hitting corporate balance sheets. It'd be like a powerful, unexpected stimulus.
And that brings us to the second major pressure point, the longest federal government shutdown in U.S. history. Every single day this thing continues, it just weighs on the economy. So for the markets, the real question isn't if it's going to end, it's when.
So how in the world can we possibly predict when it will end? Well, instead of listening to just one expert on TV, there's this really fascinating theory we can look at. It was pioneered by a statistician named Sir Francis Galton, and it's called the wisdom of crowds. The core idea is pretty cool. It's that a large group of regular people, non-experts, can collectively have a surprisingly accurate insight.
Yeah, so Galton actually discovered this at a country fair. There was a contest to guess the weight of an ox. He got his hands on all the predictions from so-called experts and just the general public, and he found something remarkable. The median guess of the crowd was almost perfect. It was just 1 pound off the actual weight, and way more accurate than any of the individual experts. It's just a brilliant illustration of that collective intelligence.
So fast forward to today, we have modern versions of that contest, right? They're called prediction markets, where people actually bet real money on future events. And when you apply this wisdom of crowds principle, these markets are forecasting a resolution to the shutdown in a very, very specific window, between October 8th and 11th. So yeah, that could be as soon as this weekend or early next week. Okay, so with these two massive uncertainties potentially getting resolved very soon, what does this actually mean for your portfolio? Let's dive in, starting with U.S. stocks, and we'll focus on the tech-heavy Nasdaq.
Right now, the market sentiment, it really feels like a dam that's about to break. The shutdown has been a major drag on stocks, so if you lift that weight, especially if you combine it with a positive Supreme Court outcome, the Nasdaq could be absolutely primed for a powerful rally, maybe picking up right where it left off.
So here's the key strategic takeaway. If they reach an agreement over the weekend, the market could gap up big time on Monday morning, leaving anyone who is slow on the draw behind. We're already seeing positive momentum building on the short-term charts. So timing here, it's everything. It might mean you have to consider getting positioned before an announcement actually drops if you want to capture that initial pop.
Okay, now let's switch gears and talk about precious metals. Because while stocks look like they might be poised to rally, the picture for gold and silver, it's quite different. That recent bounce we've seen, it could be a total head fake.
For anyone who was kicking themselves for missing the chance to sell at higher levels, this recent pop in gold and silver prices might just be your second chance. We're not looking at this as the start of some new bull run. No, it looks much more like a temporary relief rally inside of a larger, ongoing downtrend.
So this bounce offers a potential exit point. Why? Because both metals are coming up on some significant technical resistance. These are price levels where historically a lot of sellers have shown up. What's likely to follow is a really frustrating period of just sideways, choppy trading. And once this little rebound runs out of steam, more downside is a very real possibility.
All right, and finally, let's check in on the crypto market. Now, you might be thinking, hey, if the Nasdaq rallies, that's going to automatically lift crypto too, right? Well, not so fast. Crypto is kind of playing by its own set of rules right now, and the signals are, let's just say they're mixed.
Look, a rising Nasdaq is generally a good thing, a positive tailwind for crypto, but it is definitely not a guarantee. That correlation isn't one-to-one. The crypto market is really being driven by its own internal dynamics, and right now, those dynamics are flashing some pretty serious caution signs.
We're seeing a really clear divergence here. Even with a risk-on mood in other parts of the market, liquidity just isn't flowing into crypto the way you might expect. In fact, key trend indicators for major assets like Bitcoin, they're still firmly in sell territory. So, what does this mean? It suggests that patience is probably the best approach. It really seems prudent to wait for a clear, definitive signal that the trend has actually changed before you just assume a new bull run is kicked off.
So the market is at this critical inflection point. Will these ticking clocks finally resolve and unleash a brand new rally? Or is uncertainty going to continue to reign? The next few days are going to be absolutely telling. Thanks so much for joining our channel. Your subscription and likes will be appreciated.